Now, price is not Bitcoin's biggest problem.
In one of the recent uploads of Andrei Jikh, he tackled 10 of the biggest problems that Bitcoin is currently facing, other than its current price, and shared his perspective on its potential upside.
Instead, here are 10 problems that Bitcoin's facing that I'm paying super close attention to. And this is directly from Michael Saylor himself. Number 1, Bitcoin has no wash sale trading rule, which means people can just sell their Bitcoin and buy it back again, and that's not the case with stocks. So once that loophole gets closed, Bitcoin's price will become more stable. Number 2, there are over 520 unregulated exchanges that offer 20x leverage. And that means Bitcoin's price is extremely sensitive to any movements. So once those exchanges become regulated and the leverage comes down, the more stable Bitcoin's price will be. Number 3, there are over 19,000 crypto coins out there that are interconnected and cross-collateralized with Bitcoin, and not all those projects play by the rules. So when some of the big ones especially collapse, it affects Bitcoin's price. So once we get more clarification on what these are and if they're securities or not, hopefully that will stabilize Bitcoin's price. Number 4, the DeFis of the world, the decentralized finance exchanges, and some of the CeFis that act as big banks can sometimes become unstable, especially when they freeze withdrawals, which affects Bitcoin's price. So as they become bigger and more mature and are regulated better, Bitcoin's price will become more stable. Now, number 5, there's no real stablecoin. Yes, we have USDC and Tether and Terra Luna, but those are not real stablecoins in the sense that it does not give the market confidence. Grandpa and grandma don't want to put their money in stablecoins because they don't know if it's going to lose 90% of its value overnight or not. So that's coming though with Fedcoin, right? The government's stablecoin, which will actually be super helpful in giving maturity to the space. Number 6, Bitcoin does not have a spot ETF, which means grandpa and grandma's IRA money, which is trillions and trillions of dollars, is something the crypto space does not have access to, unlike traditional assets do. And number 7, crypto does not have any insurance protection like banks do with the FDIC and dollars. Because if you were to bank with a bank that collapsed, you would be protected up to $500,000 in cash and stocks. If that was to disappear, you'd get your money back, but that is not the case with crypto-oriented businesses yet. Number 8, something called FASB accounting, which is an accounting standard for companies to disclose what they're investing in and what their holdings are, for which there are no standards for crypto and Bitcoin, which discourages companies from investing in Bitcoin because then it becomes an accounting nightmare. Number 9, we still need more clarification from the SEC and CFTC with regards to what securities are. And number 10, Bitcoin is still not ESG compliant. But with each passing year, Bitcoin becomes greener and more energy efficient, which becomes harder to criticize for being wasteful. So that right there are 10 reasons that have nothing to do with Bitcoin's price that's going to change the game in the next 5 to 10 years. But these problems are not going to work themselves out in the next few weeks or few months. This is going to take a while. That's why it's more important than ever that I dollar cost average into Bitcoin, because the 4-year moving average on Bitcoin is $21,685. So right now we are in a very rare but brief period of time where Bitcoin is trading at those levels. Now, I'm not trying to convince you to buy Bitcoin, I'm just explaining what's going on and sharing my perspective.